Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurt, the legendary Hurt Locker, and you know you're rolling with Lanny, the Dividend Diplomats, and we're here to talk to you about what could arguably be one of the biggest dividend stock shakeups we've seen to date.
We're not talking Hogan going from WWE to WCW and then back to WWE.
That's right.
You right? Or was it?
No, you're right.
All right, I had it right. That's not what we're talking about here today, although Lanny, I'm sure would love to.
I would.
But before we get into that, though, smash that subscribe button, give us that thumbs up, and don't forget, everybody, check out a mug in the Dividend Diplomats coffee store. We also have t-shirts, sweatshirts, and stickers, whatever you want to build a stocking stuffer or put under the Christmas tree for your family.
We're here to talk to you, though, about a big news release that just came out on Friday, November 12th. This shook the world because we're talking about a Dividend King. The one, the only, Bert, what Dividend King just really announced a big shakeup?
Johnson & Johnson, brother. Ticker symbol JNJ.
J&J.
I guess the news, though, it's not only going to be ticker symbol JNJ anymore, Lanny, because what was the news with this shakeup?
Is it going to be a J or is it going to be a J?
Or is it going to be JNJJ for the second one?
So if you didn't catch the release, Johnson & Johnson is going to split up their company into two divisions. They're going to break out into a medical division and pharmaceuticals, and then in the other corner, they're breaking out into the consumer goods. So they're creating two entities. Johnson & Johnson are now breaking up to what could be Johnson & Johnson.
Now, what's interesting here is they are continuing the trend that we continue to see with these large conglomerate diversified companies. Right. They aren't the only major company to announce this news over the last week. The week kicked off with General Electric announcing they're going to split into three different companies. And if you owned IBM stock and you check your brokerage account over the last month, you'll realize you have shares of a new entity that was spun off from IBM. Pfizer, and we always talked about Viatris earlier at the end of last year. This is a trend that continues. Companies continue to go from having massive portfolios down to focusing on core businesses in each one of them, and they will split them off if they need to.
That's what it's all about.
Wait a second, Lanny. There's one of them I missed in this thing. How could I forget AT&T and Warner Media? My bad, everybody.
And you can actually technically say AT&T split off into like three pieces because of the DirecTV piece with private equity and then the Warner Media with Warner Media Discovery. But also Toshiba also announced they're splitting up into three companies the same day that Johnson & Johnson announced their split up. So again, this has happened many times. I mean, Abbott and AbbVie.
That's true.
Mean, there are so many dividend aristocrats that are even doing this. We're talking long-term dividend growing companies that have been here for over 100 years. And I think a great quote that management had with this Johnson & Johnson spinoff that's to come in the next 18 to 24 months, they actually said this could be the biggest shakeup in the U.S., in this company's 135-year history.
Which is insane because Johnson & Johnson is known for its consistency, its predictable sales growth, its predictable dividend growth. That's why we love them. That's why I buy them every week, because of how strong and consistent they are. So for them to say that this is the largest shakeup in company history is pretty big news.
So why is Johnson & Johnson doing this? Well, first, I think they realized within the medical division / pharmaceuticals, that revenue is just surging right now, especially with their one-shot COVID-19 coronavirus battling vaccine shot.
Yeah, and when you break it down too, and you start seeing how much of their revenue fits into the two buckets of the companies, it makes sense to see that you want to focus on one sector with pharmaceutical and medical, and then consumer, which doesn't make up a large percentage of the sales. So to put some numbers to that, the new pharmaceutical and medical division makes up $80 billion in sales. That's what they're on track for.
That's what they're on track for because they just did in the pharmaceutical alone, they did $13 billion last quarter. That's just in the pharmaceutical COVID-19 type of stuff last quarter. On track to, I think management said over $77 billion, but this is going to be like an $80 billion going forward sale.
And then when you compare that to the consumer products division, who's on track for $15 billion of sales, you can kind of start to see the thought process behind this. Let's focus and let's keep the company, the core business of $80 billion in sales over here. And while it's great to have the consumer brands with some of those great brands of Band-Aid, Tylenol, Neutrogena, Listerine, all the stuff we always talk about for them.
Right.
You see that it only makes up a small percentage of their sales, so maybe that company will be more effective for Johnson & Johnson shareholders to be spun off in its new division, in a new company elsewhere.
Yeah, I mean, management really said that these two divisions weren't really as synergistic as you would have expected to be. I mean, I guess when you're selling a medical device, you're probably not saying, do you want Band-Aids with that? The only time it ever worked was when you get the shot of the vaccine and you put the Band-Aid on.
Yeah, they're going to start putting the shot in the Listerine I thought they were developing. So every night when you're getting mouthwash, it helps keep you away from COVID a little bit.
Yeah, keeping you away from COVID one wash at a time.
But no, you're absolutely right. That is a funny scenario there, the shot in the Band-Aid. But yeah, to your point, when you get these brands together, when you do this, you have these ideas of how well they're going to function together. Clearly, though, when you look at it, they're not, the synergy was the best word to describe it. The synergies weren't there, so let's create value a different way by spinning them off.
So Johnson & Johnson doing a spin-off, as we stated, it's going to take about 18 to 24 months. Management was targeting the end of 2022, but given that they announced it in November,
right.
I don't know how, when you add 18 months to that, how you still fit into end of next year. I think it's going to be by Q2 of 23. I don't know about you, Bert.
Yeah, because I'm just thinking AT&T's timeline. It was announced at the beginning of 2021, and that one's not going to finish until the middle of next year. So yeah, I think you're probably right. I would say expect Q1, Q2 of 2023 for this to be finished.
Unless they're just very aggressive in the legal department, Department of Justice, and everybody can get the approvals that are necessary in order to pull this off this quick.
Are they sure they want to do 2 separate audits?
Yeah.
No, I'm kidding.
No, yeah. But what did the stock price do on the announcement? So in the announcement, when Johnson & Johnson, again, ticker symbol J&J, when they made this announcement of this spinoff into 2 companies, the stock price took it favorably.
Mm-hmm. Yeah.
Went up a little bit.
Yeah, it was up earlier in the day and came back down a little bit. But yeah, overall it was up 1.2% to end the day. So
yeah, ended around about $165.01.
Yeah.
To end the day.
Yeah, I guess I would look to see to make sure it doesn't crater, because that means that people are still positive about the news there. I would be a little more concerned if they made this announcement and the price fell 8% based on this news.
What's surprising to me, and I think this is actually pretty inexpensive, but call me crazy, that this spinoff management had estimated a pretty wide range when you actually think about it, but about $500 million to $1 billion will be the total cost to pull this off.
Yeah, it doesn't seem that bad.
Doesn't seem that bad. Not when you make on one side 80 billion and then the other side 15 billion.
Really squeeze the investment bankers on that one, because usually there's a much larger fee associated with these transactions.
Right. Now the one big point, obviously we're dividend investors. The dividend diplomats love dividend stocks. We love buying dividend stocks because we add to our passive income total by means of dividend income. And the beauty of J&J was because they're a dividend king. So Bert, tell us what that means.
That means that they've increased their dividend for over 50 consecutive years.
50 plus. Actually, almost 60 now.
Yeah, at this point, yeah. But yeah, to King, you only need 50. They're almost at 60. And what's been nice is they have been the model of consistency with this.
Good old.
Reliable. Their average dividend growth rate the last 5 years is about 6%. Every one of their increases seems to fall in that like 4% to 8% range recently.
Oh, yeah.
Just very consistent. You're not seeing the double digit 1 year and then 4 straight years of like 2%.
Great income stock. I mean,
their
yield always beats, the overall market, and then the rate that they grow it at always beats inflation.
Yeah, and that's why it's important to see what's going to happen with the dividend, because that's why so many people, myself included, Laney over the years too, have invested into J&J for that consistent growing income.
So Bert, what did management say about the overall dividend? Because they had to talk about what's going to happen with the dividend with this dividend stock.
It's going to remain the same. So,
boom.
Hey, whether it's one company, 2 companies, red jacket, blue jacket, green jacket, doesn't matter. As long as the dividend stays the same and continues increasing with these companies, that's what's important to us.
What they didn't really comment on is that the dividend is going to be the same in total, or is it going to be the same in the one division, and then that other division's going to have to come up with their own dividend. But what we do know, again, at some point when they do the spin-off, your dividend payout will be the same. So all your dividend investors, that passive income stream is going to at least not decrease. And, with both divisions, I could still see growth going forward.
Yeah, so a lot of great news obviously here, but there's still one question we always want to answer when we're analyzing a stock. Is this company an undervalued dividend stock to buy?
So we're going to quickly run through the 3 Dividend Diplomat stock screening metrics. Bert, what are the 1, 2, and 3 punch here?
PE ratio, payout ratio, dividend growth history, and then that bonus, once you're on the ground, we just get one more shot in there of the dividend yield.
Climb up to that turnbuckle and do Shawn Michaels flying elbow drop, or the, oh yeah, the elbow drop on the mat.
So, all right, as we said, Johnson & Johnson closing to the date.
165.01.
165.01, divide that by estimated forward earnings, you have a PE ratio of about 16x, way less than the market, which is in the high 20s right now.
Definitely. Pretty good within the industry because of that consumer goods. It's almost interesting because it's like you can argue that the pharmaceutical medical division probably keeps that PE ratio low, and the consumer goods is probably at a higher multiple, like a Procter & Gamble.
Excellent point. We'll see what happens when there are 2 separate companies where the PE ratios fall, but today they are trading at a discount.
Only 16. Now, the dividend payout ratio, again, the second metric, speaks to the safety of the dividend, and as Bert said, allows them to continue to grow their dividend for over 58 plus years. It's at 41% based on the current dividend as well as the current expected earnings from analysts. So perfect payout ratio.
Yeah, we've already talked about their dividend growth history moving into that third metric. Dividend King, they're going to keep the dividend the same and hopefully continue growing it once they do the spin-off there.
Yeah, they don't lose the Dividend King status, right?
No, not unless after the company split, the dividend payout decreases. You're going to look to make sure
it'll be adjusted essentially.
Yeah, you're going to look to make sure that the combined dividends for the 2 companies are the same and that they're going to keep increasing. That's how you're going to know they keep that Dividend King status.
And to keep talking about dividend and dividend growth and dividend payouts, I hope that they pull a Pfizer move here.
That would be sweet. And then what Lanny is talking about here is when you spin off and you split off earnings, you would expect the dividend to split as well. Pfizer had the plan to do that. They were going to decrease their dividend by the amount, in theory, of what they spun off and announced at Viatris. So you got your dividend from Viatris. It was announced. We were waiting for Pfizer to see how low it was going to drop. And then Pfizer was like, screw it. We're going to keep it the exact same. So you got a built-in secret dividend increase for Pfizer. So that's what Lanny's talking about is, will Johnson & Johnson spin off some of its dividend into this new consumer thing and then say, you know what, screw it anyway, we're going to keep our dividend exactly where it is.
Hopefully with the COVID booster shots this year, next year, offering more shots to the younger population of the world, hopefully that increases the cash flow, revenue, and earnings of this pharmaceutical medical device entity.
And boost that dividend post spinoff.
So Bert, what's that dividend yield?
2.57%. So a nice premium to the market, which is usually between 1.3 and 1.5%, and way, way, way above your high yield savings accounts of like 0.2 to 0.5, depending on wherever you keep it.
Yeah, or 0.01 if you're at JP Morgan Chase or Huntington or Citi. Get that money out of there. Put it to work, baby. So Bert, I also want to touch on this because I know you and your wife have been buying at least in total 2 shares every week for what I feel like is probably the last 7 to 8 months.
That's correct.
So this is going to be pretty wild for you.
Yeah, but we're going to keep this strategy going for now because I like Johnson & Johnson today. I like them tomorrow. I like them next year, the 5 years after that. I just like this company. Even with this move and they're splitting it off, I love their healthcare division. It's still a strong healthcare division. Their consumer brand, I'll have to evaluate once we do that and see what it is, but I still like the fact that I'm going to get stock in a consumer product company that has Band-Aid, Tylenol, baby shampoo, Neutrogena, Listerine. Those are still amazing consumer brands, and I think it'll be a strong company on its own. So we're going to continue our strategy of buying 1 share each of J&J.
So he's buying stock today, tomorrow. He's buying J&J stock next month. Based on the metrics, I don't see why you wouldn't.
Yeah. Until something changes, I get proven wrong at some point, or management makes some announcement that makes me reevaluate it, this strategy is going to continue.
What we don't know, though, is, again, how many shares of the new company you're going to get based on the number of shares you own of Johnson & Johnson. I don't think there's like a merger doc that's out there yet to really go through those details.
No, it took AT&T several months to announce the full picture of what's going to come, because they're still deciding some of these things too. They made the announcement. You think you have most of it, but the devil is in the details. As they figure it out and they make announcements to analysts and they have these investor calls, they're going to keep trickling out a little bit more information of what's going to happen in 18 months when the company split off. So hang tight with us.
So guys, Johnson & Johnson company's going to split into 2 companies. Again, to summarize, the pharmaceutical medical division, which is currently projected to earn $80 billion in sales, and then the consumer goods, company that earns about $15 billion in go-forward revenue. dividend will remain insane. As of right now, we know that's in total. In addition, this is probably going to happen. Management as early as 2022, towards the end, fourth quarter. We think more than likely in that Q1 to Q2 of 2023. We don't know the number of shares or shares of stock you're going to get in the new entity. Bert and his wife are going to continue to buy Johnson & Johnson stock every week still on a go-forward basis. Bert, anything else you want to kind of talk about here?
No, just keep everyone stay tuned. Obviously, in the comment section, let us know your thoughts on the transaction. If there are any details that we left out of this video that you think are going to be relevant to the viewers and to everyone else just to learn more, maybe you saw an article we didn't, we would love for you to post that into the comment section. And if you haven't already, subscribe to our channel. Give us a thumbs up. Everybody, thank you for your support over the years as we bring you this breaking dividend news.
Thanks for stopping by. That was Bert, and this was Lanny from the Dividend Diplomats.
Over and out.